Imagine that someone tells you, give me 100,000 naira this month. Next month, I'll give you 130,000 naira. No investment, no factory, no business, no stock market, no bank. But I'll give you 130,000 naira next month. Just like that. Thousands of people laughed at the idea, but millions believed it. And it worked for some time. Some people cashed out. Many people made money, but millions of people were thrown into debt. Millions of people lost millions of naira. That is the story of one of the biggest fraudulent schemes, financial frauds in Nigeria, called the MMM. So in this video, we're going to look at how it happened, why it happened, the origin, and everything you need to know about the MMN Nigerian version. My name is Echala Okori, Finance Simplifier. So I urge you to watch this video to the end, because the end is more fascinating than what happened at the beginning. So let's look at it. So the story of the Nigerian version of MMM did not start in Nigeria. The founder of MMM was a Russian named Sergei Mavrodi. He was a mathematician and an entrepreneur. So in 1989, he founded a company called MMM with his brother and another partner. Initially, the company sold computers and office equipment, but Russia was changing rapidly, after the collapse of the Soviet Union. So people were desperate for opportunities to grow their money. So Mavrodi saw that desperation and he decided to cash in. So when people are desperate, I can assure you there's always one smart criminal who is going to take advantage of them because they're desperate. So whatever you do, there shouldn't be desperation, especially financial desperation. So soon, MMM transformed into one of history's largest Ponzi schemes. Millions invested. Some estimates suggest that over 10 million people participated before the scheme collapsed in 1994. Many families lost their life savings, yet Mavrodi became famous and infamous, notorious. Even after facing legal consequences, he continued launching similar schemes in different countries under the MMM name, using the same name, and people still kept falling for it. So one of those countries was Nigeria. That's how it came to Nigeria. Next, I want to tell us why Nigeria was a perfect place for it. Why? Why did it grow in Nigeria? First, people have the condition, the quality that is needed for MMM to thrive. And that is what? Desperation, financial desperation. So fast forward to 2015. Nigeria was facing economic hardship. Okay, just as it is still facing economic hardship even now. Oil prices had fallen, inflation was rising, many young people were unemployed and desperate for the good life. Families were looking for extra income. Then came social media. Social media made it very, very beautiful. There was WhatsApp, there was 2Go, there was Facebook, BBM, name it. Social media came. So people began sharing screenshots. It was easy to, to propagate the MMM story. So people were sharing their screenshots. You hear, I received 650,000 naira. Wow, it actually works. So church members invited one another. Muslim brothers and sisters also invited themselves. Friends recruited friends. Brothers recruited brothers. Sisters recruited sisters. Even enemies united because of MMM. Entire offices discussed MMM during lunch breaks. People go to work, and once it is break time, even during work hours, people will be discussing MMM. You see somebody who is wearing new clothes to the office, who is doing better than he was before. And then people want to know the secret, and you tell them it is MMM, and it actually works. You tell them. Sometimes some will whisper it to their close friends, like it's one closely guarded secret of success. That was how it worked. Entire offices discuss MMM during lunch breaks. Trust spread faster than advertisement ever could. The promise was irresistible. 30% on your savings every month. But no bank was required. So it was not technically savings. So let's see how it worked. Okay, this is how the MMM worked. This was how the scheme worked. This is where many people misunderstood what was happening. MMM claimed that it wasn't an investment company. That is the shocking part of it all. The company claimed that it was not an investment company at all. It described itself as a mutual aid community, a community to help ourselves, a community aid. I help you, you help me. So participants didn't technically invest. It was not investment. Instead, it was PH. You provided help. So when you provide help, you send money to another participant. Then 30 days later, you get help. You request for help. Another new Mugu will give you help. So that is GH. So it was all about PH, you provide help, and GH, you get help. So you receive money plus 30%. But here's the key question. Where did the extra 30% come from? If there was no investment, there was no factory, there was no bank, there was no trading, there was no business. So where was the 30% coming from? Did MMM own oil wells? No. Did it own factories? No. Did it own real estate? No. Stocks? No. Where was MMM getting 30% to give to people? The money came almost entirely from new participants joining the scheme. So fresh people who are recruited into the Ponzi scheme were the people paying the 30% returns. Now let's use an example. Suppose A joins with 100,000 naira. B joins with 100,000 naira. C joins with 100,000 naira. You have three people. How much do you have there? You have 300,000 naira. The money pays earlier members. This is what they use the money to do. They use it to pay earlier members, people who had already provided help before. So everything appears to work. More people will join. More payouts happen. Confidence grows. The system looks brilliant. The A, B, and C that pay, they too will get their own. New people will come and pay them 130 each. The system looks brilliant, isn't it? But it can only survive as far as new money keeps flowing. The moment that new money does not flow in, it cannot work. So that was how MMM worked. Was it sustainable? We're going to find out whether it was sustainable. I'm sure by now all of us know that it was not sustainable. But let's find out what happened and how it did. Now, why did people believe it? Something like that, ordinarily, you should think that normal thinking human beings will not believe it. But don't laugh at people because you don't know how it was packaged and you don't know how they looked at it. Everybody can fall victim of a Ponzi scheme. So, at the end of this lecture, perhaps I would have enlightened you and taught you some tricks so that you don't fall victim. So, why did people believe it? This wasn't just about greed. If you look at it that it was all about greed, you got it wrong. It wasn't just about greed. Psychology played a huge role here. People trusted their pastor. People who are respected. Pastors, imams were involved. Mentors recruited their mentees. Role models were involved. Superstars were involved. Community leaders were involved. People recruited their cousins. Cousins recruited cousins. Neighbors recruited neighbors. Neighbors that have always respected each other. They recruited themselves. So it was not all about greed. Colleagues at work recruited themselves. Look at a situation where you know that your colleague in the office will never want to defraud you. And he wasn't defrauding you, at least. Given the information he had, to the best of his knowledge, he thought he was not defrauding you. So that's why it worked. someone they knew had actually been paid. They were seeing evidence of payment. People saw evidence. Somebody put in 100 and got 130 at the end of the month, and he showed you the evidence. He showed you. So it was not all about greed. It was psychology. So they made it feel legitimate. The fear of missing out took over. Everybody wanted to be involved because people who were not involved felt like they were missing out. I was somewhere and somebody was saying, let them keep talking, let them keep condemning it. We are cashing out, we are making our money. So people were making money, and those who were not in it felt like they were being left out. So they made it look like, if everybody around me is making money, why should I be left behind? So that's exactly how these schemes grew. And that's how the MMM worked. Now let's look at the mathematics of failure that was instituted by the great mathematician Sergei Mavrodi, the Russian mathematician and entrepreneur. It's not like he didn't know it was a fraudulent scheme. He knew. He knew. It's not like he was a bad mathematician, no, but he instituted a mathematics of failure. So I want to show you as an accountant why that mathematics was doomed to fail, and why, if you see it ever again, you should know that it's definitely going to fail. So let's do a little math. Imagine 1,000 people each invest 100,000 naira. MMN now has how much? That's 100 multiplied by 1. That's 100 million, isn't it? Good. So you have 100 million naira from new participants. 1 month later, you are owing those investors 130 million naira. So that's what you are supposed to give to them. Where does the extra 30 million naira come from? Where are they going to get? Where are you going to get 30 million naira to give to the investors? You have no factory. You have no business. You did not invest in stocks, no real estate, nothing. So where are you going to get it from? You're going to get it from new people that will be defrauded. Only one place, and that is from new investors. The following month, even more money is needed. So for the new month, to pay that 130 million, you need extra money. And if you get for that month, the following month also, you need extra. So it will get to a point where it will fail. That is why it's a pyramid scheme. It's a Ponzi scheme that cannot stand. It will collapse. So eventually, the number of new participants required grows faster than the available population willing to join. The mathematics eventually catches up. That is why Ponzi schemes don't fail, because someone suddenly steals the money. In Ponzi schemes, nobody is stealing any money. Nobody steals the money. The system collapses because it is standing on no foundation. There's no foundation. The mathematics is wrong. So it will collapse, and that's how it's going to die. The model itself cannot sustain the promised payout indefinitely. It will get to a point. A friend, actually, someone I trust so much like a brother, he actually tried to recruit me. He's watching this video. He's watching this video. Yes, he's in Port Harcourt watching this video. We did NYC together, and he was in my office to recruit me. And I told him, it showed me evidence that he had been living on MMM payouts because his work had a little break. And he told me it was MMM money that was sustaining him. He tried to convince me. I told him, let's do the maths. And we did the maths. I told him, yes, it's working as far as there are people foolish enough to join. And I told him it was close to Christmas. And I said, at this point, more people will go in for Christmas money. And it will get to a point where it is not sustainable. So let's look at the collapse. In December 2016, MMN Nigeria announced that accounts will be frozen. The official explanation referred to heavy withdrawal requests and the festive season. Many participants expected things to resume normally. For some, payments resumed later. For many, they did not. Confidence evaporated as people rushed to withdraw. You see, that's how it happens with Ponzi schemes, with pyramid schemes. Once confidence is lost, because it is not built on any investment. They are not doing any investment. It's not like they are using the money to trade. It's not like they are using the money to do business. Nothing. It is just based on trust. And once that trust is dashed, for them failing to pay one person, confidence is gone. And once confidence is eroded, the scheme will collapse. And that was what happened. So immediately confidence evaporated. People started rushing to withdraw their money. As people rushed to withdraw, there was not enough incoming money to satisfy everyone. You want to get help. Nobody is willing to give you help. You want to get help. Everybody is looking for who will provide help. Nobody is willing to give anybody help. So you need somebody to provide help. Nobody is willing to provide that help. So the chain was broken. The link broke. The system collapsed. Families lost savings. Friendships were damaged. Trust was broken. What we should learn, that's the next thing I want to talk about. What do we learn? Okay, MMM is more than just a story about money. Okay, so what should we learn from the MMM scheme, the Nigerian version of MMM? In fact, MMM generally, not just Nigerian scheme, MMM worldwide. What should we learn? It's not just about money. It is about human behavior. People love cheap things. So once you hear that there's free money, people want to rush. There's no free lunch anyway, not even in Freetown. So once you hear that the lunch is free, human nature will want to push you to go and get the free lunch. But there's no free lunch. Nothing is free. So the thing is, if there is no investment, then you should ask yourself, where are you getting the returns from? Because we say the higher the risk, the higher the returns. So if there is no investment, there's little or no risk, you are sure that you are going to get guaranteed high returns. Come on, it's not the government. If it's the government, treasury bills, we know what they give you. The return is not so high. It is guaranteed. It is zero risk because that's treasury bills. Treasury bills, FGM bonds, whatever. Once it is issued by government, when we do our CAPIM calculation, that's the capital asset pricing model, we give it zero risk. We say it is risk-free because it is guaranteed by the government. But if it is by individuals, they are guaranteeing you high returns and they are not doing any business. Come on, there's little or no risk. And then there's pressure to recruit people. You should know that there's something amiss. So a lack of a clear underlying business generating profit. If there is no business plan to show you that this is how we make our returns, you should be afraid. Ask questions. Where is the money actually coming from? Any investment that does not show where money is coming from is definitely going to fail. If the answer depends mainly on attracting new participants, that's a major warning sign. Financial literacy isn't just about making money, it's about protecting what you already have. So after this MMM, I'm also going to do another one that a lot of our young people in Nigeria are joining. They send them out as marketers. They promise them they will go to Dubai, they will go to America, they will go to all the countries of the world. They show them very beautiful pictures. But at the end of the day, the people who actually enjoy those places, those benefits, they are less than 1%. So they recruit a lot of people. And the product they sell, you know the people I'm talking about. I don't want to mention names. They go with products. The products are so overpriced. They know that in the market, that product is worth 100 times less the price that they sell it at. But because they form a chain of marketers, so you have your upline, downline, and all of that. So you recruit people. Because of that, they sell them at outrageous amounts with promises. So it is not the product that you are buying. People who buy those products, I mean, they show you something that is just for your beard. And it's something that you go to the market, you can buy for 5,000 naira, but they're telling you that it's 50,000 naira. What's that? So it is not, that is not what they're selling. They're selling you a promise that you will go to Dubai, that you will go to America, that you go to Canada. So you can see, I'm going to talk about that next, but just to keep this video short, so we don't get it too long. History has a way of repeating itself. The names change. The apps change. The logos change. But the mathematics never changes. Understanding how MMM worked doesn't just explain the past. It helps us recognize similar warning signs in the future. So if you found this breakdown interesting, I want you to share it with someone. Give us a thumbs up. Like, comment, share, subscribe. Turn on the notification. We don't just talk about financial fraud. We also talk about, we do deep dives about International Financial Reporting Standard, about financial literacy, what everybody should know. It doesn't matter whether you are an accountant, a professional accountant or not. As long as you use money, as long as you make investments, as long as you use financial information, you need to make the best decision. And making the best decision is a function of what you know. So you should have at least average or above average knowledge of business, financial terms, and all of this. And that is why on Finance Simplifier, we demystify what people see as difficult. You need to know your finances. Accounting is a language of business. So you should have a rock solid knowledge of accounting, at least the basics, if you're not an accountant. And if you're an accountant, then I urge you to become a professional accountant by looking at our deep dives, International Financial Reporting Standards, all the standards from IFRS 1, first time adoption, IFRS 2, share-based business, IFRS 3, business combination, 4, insurance contract, next one on current asset, held for sale and continued operations, like that. So all the standards, I have over 100 videos and we have done a very clear breakdown so that everybody can understand them, pass your professional accounting examinations very easily so that you don't keep writing exams year in, year out and be generating money for the professional bodies. So you pass your exam, subscribe and learn for free. And also, if you're a lawyer, if you're an economist, if you are a pilot, if you're a medical doctor, whatever you're doing, if you're an entrepreneur, most especially, you'll benefit so much from this channel. Also, if you are a user of financial information, they give you financial statements. You don't know what a balance sheet is. So what do you use it for? You should know what is contained in the balance sheet. The balance sheet tells you about the assets, about the financial position. You know about the assets, you know about the liabilities, okay? You know about the equity. This is what you get from the balance sheet. So you should know what it is and how it is prepared. You may not really know the details, the in-depth preparation, but know what to look, know the information you are getting from the balance sheet when they give it to you. When you see an income statement, it is about performance. It's a measure of performance. Know how to look at it. So we have done videos to demystify all of this. So my name is Echola Okori. I encourage you to keep learning with me. Bye for now.